Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and let's begin with last week's events. We had the Federal Reserve come out and raise rates by a quarter percentage point. You had Goldman Sachs and Morgan Stanley betting in advance of the rate increase that there would be 4 rate hikes in 2018. I said, no way. There's no way they're going to raise rates 4 times in 2018. Sure enough, the following day, Jay Powell announced that there would be 2 more rate hikes for a total of 3 in 2018. Goldman Sachs and Morgan Stanley had it wrong. We had it right. And I'll be honest with you, folks, I don't think there's going to be another rate hike for the foreseeable future. Why? It's because this market is rolling over. And for those of you out there who believe the propaganda that the Federal Reserve is not meant to support the stock market, then what's it been doing for the past 20 years? All it's done is live to support the stock market. What did CNBC do and the other liberal elite media do after Jay Powell's testimony? They moved to demonize him. Why? He's a Trump appointee. And all they would publish, the headline said, hawkish Fed chair, when in reality, he was dovish. How do I know that he was dovish? How do I know that my opinion is being validated besides the fact that he came out and said only 2 more rate hikes in 2018? I looked at the bond market. What did the bond market do? It didn't rally. If he was hawkish, the bond market would rally. This is a 10-year yield. The bond market closed down, folks. Prior to him speaking, we were breaking out on the week, but we reversed to close lower, and we are threatening to break down below support. And you may be saying, Bob, a lot of money fled to the bond market, which caused yields to drop. Fair point. So acknowledging that, where else did I look to see whether or not Chair Powell was dovish? Look no further than the TIPS, Treasury Inflation Protected Securities. If he was hawkish, they would have dropped. What did they do? They broke out. So in this time of indecision in the market and the fact that we are rolling over, and I warned of this at the end of this video, I'll link to 2 videos I put out. One was my 2018 stock market forecast, and the other was our traders whistling past the graveyard. And I pretty much predicted that what we're seeing now would unfold, and here we are. This market is rolling over. The charts were telling us months ago that this was setting up. And you may be asking, how did I do last week? We did great. Did we take a couple of losses? Absolutely we did, but we kept the losses small. We did not go aggressively buying positions. If the positions that we put on did not perform, we did not add to them. We kept our buys small, and we stopped out. And our other positions in the gold mining names, they moved dramatically last week to the upside, and we have very large positions there. More to come on that. So what I want to do is set expectations of what you should expect in this market. Here's what I had to say on Friday on Stock Charts Today at about 4:30 in the morning. Weakness in the S&P 500. Let's see how we are poised to open up this morning in light of the sanctions news out of China. We're going to open up weak here, but I think that we are going to get an intraday rally back. Now, there's a saying that I like to use at a time like this. I discussed it with members last night. Today's lows could be tomorrow's highs. Think about what you do not want to be sitting over the weekend with, were it a losing trade, and look to sell the rally. Sell till you could sleep. There's no shame in booking a loss. There's a shame in allowing a loss to run from a small loss to a big loss, but there's no shame in taking small losses. We are in the business of taking losses and preserving capital primarily. So here was that rally back that I mentioned because we were down in the pre-market. I mentioned that we would get a rally, lighten up, sell till you could sleep. There was your opportunity. Once we broke down below this lower band of support, you knew it was all over, especially when we broke down to new daily lows. Now, do I believe that we're going to get a rally back this coming week? Absolutely. Do I believe it will fail? Absolutely. I think we're heading lower here. So if you want our strategy on how we are trading this market, how are we positioned, I will be sending out to members the week ahead commentary tomorrow being Sunday. It'll outline where we see the markets heading, how we plan on adjusting our portfolio, and what are we looking to put on as our trades for the coming week. I'm going to go do a high-level view of those potential positions later on in this commentary. And we already opened up short positions of the S&P 500 last week, and we are profitable on that trade as I speak. Now, let's talk about capital preservation a bit. What I did, let's go to it right now. Okay, so what you're looking at here is the members forum. I opened up a new channel. We have several channels here. Open forum, that's general discussion, cryptocurrencies, current positions, and the commitment channel. This is a channel that I put up on Thursday evening because I had concerns with regard to members not stopping out of positions, as well as myself. Last week was not about aggressively buying dips. It was all about capital preservation, because I truly believe that we are going to have great opportunities appear on our radar screen, but we're going to have capital to be able to take advantage of them. So I created the commitment channel. That's basically where members and I enter our symbols and we commit to a stop price. And here you can see that Brian, commitment channel might have its first test. And yeah, that was me. I was the first one to stop out. And another funny one, I'm out last night having a couple of cocktails with friends, and I'm not a big email checker during the daytime. So I checked my email, and here's what fellow member Kate sent me in the final minutes of trade yesterday. I solicited new names because I have the imagination of a street sweeper. So I solicited new names for the commitment channel. Kate sends me over honor thy stop. I think she was referencing the fact that I need to stop out of the EDC position, obey thy stop, stop loss vows, and SL pledges. So we're going to vote on which one of these we like, and we're going to change the name of the commitment channel to one of these. Kate, thanks very much for making me laugh and providing suggestions. And folks, the value of having the forum, unlike having a chat room, is to not have impulse buying. It's all about forming relationships and committing to stopping out, preserving capital, and sharing trade ideas, which is what we try to do. So I would encourage members to please continue on with building relationships and entering your symbols into the current commitment channel, but we're going to change that name. And if you're not currently a member, sign up for the 14-day free trial offer, please. All right, so I spoke about committing to preserve capital. With EDC, we stopped out yesterday because we broke down below this lower band of support. So that was my commitment to members, and they held me accountable. And that's a great thing. Think about that. Having somebody hold you accountable for saving money. Because in all probability, we are going to head lower here on EDC. I'll be looking to buy it back because longer term, I am quite bullish on the emerging markets. But it appears as though they're going to go down with the ship for a while with everything else. So we'll be looking to buy EDC back at lower prices. You had both lines on Stokes on Friday, closed down below the 50 level. That's very bearish stuff. So while we may get a rally back, I believe that rally is going to fade, and we are going to head down lower. But we will be looking to buy back in on the EDC because I'm very bullish longer term on emerging markets. I want out of the United States markets, unless, of course, they have emerging market exposure or exposure to commodities. Now, last week, I went over a whole slew of stocks that I thought were good long candidates. I didn't execute a trade on any of them. Why? It's because the market was weak and getting weaker. No reason whatsoever, despite the fact the stocks I was discussing, by and large, was showing relative strength versus the S&P 500. Why did I not bet that those stocks would continue to display relative strength? It's because we have massive, record high margin debt. And as the markets continue to weaken, I knew that we would have margin calls. And when margin calls hit, traders tend to sell their winners. And sure enough, pretty much every stock I went over last week on best stock charts, you can go back, take a look at it, it's still posted, failed last week on both a weekly and daily basis. And while I still believe that those companies longer term will do wonderfully, then they'll probably rally back first before the S&P 500 rebounds, they will see continued weakness. And one of those positions was Power Shares Water Resources, PHO. This is a perfect case in point where traders were selling anything to get some liquidity. And why am I talking about PHO? Does anybody think that people are going to stop drinking water? If anything out there were to indicate that stocks are being sold indiscriminately last week, look no further than PHO. We broke down below the lower band of support on a weekly basis. In all probability, we are rolling over here on a daily chart. Absolute devastation last week. And again, we didn't open up positions on any of these. We had no exposure to the downside on these names. Because what we did is we wanted to see how they would close out the week. They did not fare well. We showed patience, which, as I always say, is a learned behavior for me. And they all rolled over. Now, let's talk about what's going on out there. Why the market's so weak? Why is LIBOR, which is the London Interchange Bank Rate Index, is basically an index that measures the cost of capital that one bank must pay another bank to borrow. And it influences the mortgage market here in the United States. Why are those rates shooting up higher? There's something very, very wrong out there. And I was speaking about Deutsche Bank all week last week to members. And Deutsche Bank, there's something going on. I don't know whether it's a liquidity crisis or not, but if this continues, this sell-off here, we were down. This is one of the largest banks in the world. And I'll tell you right now, if Deutsche Bank goes under, you're going to see tremendous pressure, even worse than last week, on the banking system, because Deutsche Bank has counterparty risk with probably every bank and insurance company in the world. And we were down, and we are down 14% in 1 month alone on Deutsche Bank. And I think that we're coming down here, and we will probably break the 2016 lows on Deutsche Bank. This bank has never rallied back above the lows of 2009. It's never recovered. There's something very, very wrong here. So keep an eye on the banking system. What else is wrong? This is the Chinese Renminbi versus the US dollar. So basically what you're looking at is a chart of the Chinese currency versus the US dollar. And you could see that the Chinese Renminbi is rallying. We are poised for a major breakout here. And what I have overlaid is the price of gold in gold line chart. And you could see that they trade in tandem. So as the Renminbi breaks out, it means the dollar is weaker, and that means that gold is pushing higher. What did gold do last week? It broke out. Are we long of gold? You bet. But I am long in the gold mining names because they have a lot of catch up to do to the price of gold, which is held in there fairly firm in 2018. We'll talk more about gold in a moment because we are looking to put on a position. So why is the Chinese currency rallying despite the fact that we put tariffs on them last week? Wouldn't that destroy their economy? No. They don't pay the tariffs. We do. The U.S. consumer. We are playing with absolute fire. The Chinese have been financing a lifestyle which we cannot afford. The United States government and the average consumer is bankrupt. And that is not hyperbole. It's reality. The vast majority of people are living paycheck to paycheck, using credit cards. Credit card debt is at an all-time high. Student loan debt. And what did Congress give to the president yesterday? And he signed off on it? A $1.3 trillion spending bill to keep this monstrosity of a corrupt government going. And I'm not talking the Democrats are corrupt. I'm talking the whole goddamn establishment. It is horrible what's going on. So last evening, President Trump all but assured that the U.S. dollar is dead currency And you're going to see the Chinese Renminbi. Let's throw some lines up here. We'll revisit it next week. Here you have it. We are in an uptrend. We broke out of a massive base. This is a weekly chart. And we are poised for a breakout. Now, we are prepared for this breakout. We see what's on the horizon. Our strategy has been built around this very event. You can go back, take a look at my videos going back months. I have been warning about what is unfolding for months now, like I'm a broken record. But we are positioned quite well for it. If you're not currently a member, I would encourage you, please sign up today. Don't waste a moment of your time. If you're a gold member, enter your symbols on our ticket cloud, and I will review your symbols before the open on Monday. And the one gun that is pointed at our heads at the Chinese, if they pull it, let's go back to the 10-year yield. If they pull the trigger on that gun, and that gun is if they begin to sell our debt, forget about not showing up for the auctions. They stopped buying our debt aggressively years ago, but they still sit with billions upon billions of dollars in treasuries and in US dollars. If they decide to sell our treasuries, even a small fraction of them, you're going to see yields surge, break out. And things are going to get real fair, real quick in this economy relative to how the rest of the world has been living in the emerging markets. Are you ready for that? Are you ready to see the dollar collapse? Let's take a look at the US dollar last week. Last week, we rolled over. We were down 0.85% on the US dollar versus the basket of currencies, the euro, yen, etc. And it appears as though we are rolling over. We did have a rally up into this upper band of resistance. We had a failed breakout. Last week, a bearish key reversal. If we break down below 88.15 on the US dollar, we're going all the way down to here, 84.80 in a heartbeat on the US dollar. Take a look at your Stokes rolling over. What should we be owning as the dollar rolls over? We'll be discussing it tomorrow on the week ahead commentary. So if you're not currently a member, sign up. All right, let's talk watch stocks and ETFs for the coming week. TCP Partners, I spoke about this one last week. It was extreme oversold levels. Let's go to a daily chart. We'll discuss the weekly chart with members tomorrow. We were very oversold. I think we had RSI at about 13 last week. And we did rally on Monday, but I warned, because there was some conversation in the forum about getting long of it. I warned, no, don't do it. The market's weak. We'll probably roll over here. And sure enough, we broke down to new lows. So we have a new price target. Lower lows we're expecting on TCP. We'll talk about this one in greater detail tomorrow. Volume bars are dropping off, which is good. RSI is down below the 17 level. So looking attractive, but I think we're going to get lower lows next week. We'll talk price targets, all good stuff. More to come, members. LABU, I would not go buying LABU early next week. I think it's going lower. We're looking for a reversal day, and we'll look to get long. There are certain sectors which are taking it on the nose right now that I believe longer term will recover and outperform the market. Biotechs are one of them. LABU is my favorite in this space because we've traded it before. I'm familiar with how it trades. It's a leveraged ETF, so very volatile. It's good to always have a feel for how these things trade. The FAZ weekly chart. This is an ETF which puts you short of the banks, and you could see that we have broken out. This is no joke. As I mentioned earlier, there's something very, very wrong with the banking system. We have broken out on RSI. We're breaking out, or actually we haven't broken out on Stokes. We have higher lows on Stokes, no breakout yet. And we have broken out on price out of this long-term downtrend. We have a double bottom setup, a higher low, prior low 9.70, new low 9.73. Now it's off to the races. We are probably going to get a rally in the banks because they left out the week last week, very oversold. I do not think that rally will last. So on that pullback, we're looking to open up a position in the FAZ. Members, more to come on strategy using the daily chart. SOXS, this puts you short of the semiconductor sector. We moved higher last week. We closed slightly above resistance. We have a breakout in ultimate oscillator. Volume last week was outstanding, as was the week prior, and volume rose sequentially. All good stuff here. Higher lows on Stokes. Higher lows on RSI. No breakout quite yet. So it makes it onto our watch list. Does that mean you go shorting on Monday morning? No. Why? Take a look at the semis, the SMH. While they had a very bearish week last week on a weekly basis, lower highs, lower lows, the downtrend on RSI is firmly in place as it is on Stokes, yet price just hasn't gotten the message yet. Dead man walking here, daily chart. So here are the semis on a daily basis. Rallies are being sold. So what we're looking for is a rally to be faded. That's when we'll begin looking to open up a position using the FAZ as our vehicle. The small caps. The Russell 2000 has a double top, and the TZA puts you short of the Russell 2000. It is poised for a breakout. Volume was very strong last week, above average. Higher lows in Ultimate Oscillator, higher lows on Stokes, higher lows on RSI. The setup is in place. Would I go jumping in with both feet on Monday morning? No. You need to enter these positions tactically. As I mentioned, we're already short of the S&P 500, and we'll be looking to add more. We'll discuss that position with members tomorrow on the week ahead commentary. Real estate. If yields move higher, and think about it, last week they moved lower, yet the SRS, which puts you short of real estate, rallied. God forbid yields break out, you're going to see real estate get clubbed like a boxer with his hands tied. It's not going to be pretty. We have a bull flag formation set up here. Volume was above average last week. Be very, very careful of getting long of real estate, as it appears as though it's ready to break down. New home sales have been weak. The GDX weekly chart, we broke out last week. The GDX puts you long of the gold mining names. We are very long of the gold mining names. I'm using a leveraged ETF. Members will talk about it tomorrow. I have been trading the gold miners for about 2 years now. We enjoyed this rally higher. We are in a very tight pennant formation, and it is getting tighter. If gold breaks out above 1,400, it's all over. These stocks are going to rip. You have very little analyst coverage of these names. Once they start getting upgraded, it's off to the races. There's no institutional money making its way into these names, except maybe for last week. They finally started to wake up. We've been buying up the gold miners for months now. If you want more volatility, take a look at the GDXJ. They had a nice week last week. Possible higher low on Stokes. Definite higher low on RSI. And in fact, it broke out. Higher low and then a breakout above the February high. Volume outstanding. Speaking of gold, very few people appreciate the fact that gold is up on the year while the S&P 500 is down. Gold has broken out. It broke out months ago, folks, back here in August of 2017, if you can believe it. We have pulled back, retested the breakout point, and we have been putting in higher lows ever since. This month here, we have a bullish key reversal setting the stage for a massive breakout. If you do not have a position in gold, you need to join, because we are buying up the precious metal space and we are executing on our strategy for outperforming this market yet again this year. When we're wrong, we're cutting losses small. Remember, I have the commitment channel. If you want to preserve your capital, put your positions up there and have other members, including myself, hold you accountable for standing by your stop loss order, preserving your capital. That way you could live to play another day. If you're not currently a member, please sign up for the 14-day free trial offer. If you are interested in watching the pre-market commentary that I have up called Stock Charts Today, go to YouTube, subscribe to my channel there, click that bell. It'll notify you of when new commentary is issued. I do not send out emails of best stock charts today because I worry about spam, getting too spammy. I do send out best stock charts each week. If you want some free trade tutorials, enter your email address on the website. Trust me, you will not be spammed. I just don't do it. Members, I will talk to you tomorrow on the week ahead commentary. Everybody have a great weekend and have a profitable trading week. Be well.